All right, welcome back. Good morning, everyone. We're going to get right into the charts, look at some technical analysis. Before I get started, give me a thumbs up. I think you guys can do that. It's not that difficult. And I'll continue to put out these videos showing you what I see in the charts. All right, so we're going to start out here with triple Qs. This is your tech sector. This is an hourly chart here. The thing, right now, it looks like we're kind of flagging out. We basically have, we're getting kind of this flag action. We're getting higher lows, but we're not really moving above this previous level of 322. So 322, we gapped. That's the gap right there that we filled yesterday. We gapped down yesterday, came back up, filled the gap, and then sold off. And we're now still below that area. So again, that's resistance. We're below resistance, and we're trending down in the short term. So I think we're heading lower. Whether we run up and hit the top of this again and test it, that's probably likely today since we're so close. But I still think we're below resistance and we're downtrending in the short term. So I think we're heading lower. And what I'm looking for, we'll start I'm looking for a break of this kind of flag area, and probably a break of yesterday's lows. But ultimately, this to me looks like we're heading down to this 300 level. So this is going to be where I'm targeting there's a lot more support there in this area. You can see on Qs, we had that's basically the top right here. This was a little bit of an overshoot. Let me zoom in just to show you guys. We overshot that, but then we gapped down and basically we gapped right to 300 and then sold off. Came back up, hit it as resistance, a little bit shy, but right in the area. Hit it again, and then we broke above, right here we broke above. And then once we were above, came down, held the support twice, and then it was off to the races. So that's the area that is going to be the more major support. We're about halfway there at this point. Looks like we're kind of flagging out, making a bear flag. Something like this, and then it's going to project us down to 300. So again, that's the area that I think will get a more sustainable bounce, and that's what we're watching for. And this is just short-term stuff. I think we're going to get down there relatively quickly. I don't know if it'll happen this week. Maybe it'll be next, but I think it's going to be pretty quick. Someone asked me what I'm planning to do if it gets down to 300. So, because that's major support and I'm shorting the market, I cover my trades when I get into major support. And depending on if I think there's more downside, I'll either just let it bounce and then add back to my shorts after a bounce, or I'll go long sometimes depending on what I think is going to happen. Now, for a swing trade, I think it's very possible that we could potentially be breaking this 300 and going much lower, possibly down to this 282 area for a swing trade, maybe even lower. But, coming into that 300, I could see us bouncing from there. We could bounce all the way back up to 314. We could we could run up and fill this gap at 329. That's possible too. So, I like to cover my shorts when we come into major support, and on the index basically. Each stock is obviously different, and then I look for re-entry or a new trade. I look for signs of a trend reversal. If we don't have bullish divergence and we're running into this 300, I think it's likely we're going to go lower. So we'll just have to judge it as we get down there. But I will likely cover some, take some profit down into some support levels. SPY's not falling. SPY is really kind of hanging in there. So, SPY's just off the all-time highs. It's hanging in there because of the financials, and the financials continue to be pretty strong. So SPY doesn't want to fall. It's not really going up, though. I mean, we're basically sideways. I don't think SPY is really going to be able to go anywhere without tech. Even if all the other sectors are rallying and if tech is selling off, I think SPY is just going to be flat. So I am anticipating that weakness in tech to start to bleed into these other sectors. I'd like to start to see it, though, and just don't see it yet. So on SPY, the thing to look at is we had this bearish rising wedge marked out in green. We broke. We back tested here and then back tested all through here, and now we're trending down. As you can see, we are something like that. We could right in there. We're making a series of lower highs and lower lows, so we are trending down. And I think that trend's going to continue. We're bouncing today, but I do believe we'll probably start to roll over and continue to trend down. Where's SPY going? Well, we have this trend line support way down here. We've had 4 reactions, 1, 2, 3, 4. I could be off on my trend line, but it's maybe somewhere right in this area of about 362, 365, depending on when we get there. I think that's going to be the next level of kind of major support. And I do think SPY's actually going to be headed down there. But we just have to wait to see if this downtrend continues. Okay, a little bit of a bounce in TLT. I was expecting that bounce today because you can see this blue line that I have marked out. Let me go to the daily. You'll see here, this is going back to 2011. This is when we started a trend. Held support here, broke right in here, but the Fed basically pumped this back up, held support again, and then we're coming right back down to that trend line. So to get a bounce here makes sense. Now, if we start breaking below this area, really a break of today's lows and a close below today's lows, then there's some problems in interest rates that we're gonna start to see signs of it for larger problems. I think the market can handle what it's got right now. I don't think it can handle any more. And tech is obviously tech is having a problem with the interest rates rising. So that's what I'm saying is we get any more drop in the TLT below today's lows, which is right about let's zoom in. It's about 139 or so. A close below that, and I think we're going to start to see some real problems in the markets. TLT obviously is the long-term Treasury bond, which is the inverse of this TNX, which is the interest rates. So interest rates sitting about 1.38 on the 10-year, much beyond that 1.43. I think we got some problems. So I don't think we can handle interest rates much higher than that. So just watch that 10-year. It's important. Gold bullion still hanging in there, still looking constructive. This takes time to develop. Again, I have this green area circled. That was my area to buy. That was the area that I felt was good support. The reason why I like this area is we undercut the most previous lows. Right here. Here was the previous low. We just barely undercut it. But when we did, we put in higher momentum. See how they were trending up in the RSI and the PPO. So that's bullish divergence, which means this was a divergent low. And I think we hit higher from here, to be honest. And you can see as I zoom in on gold, we're kind of holding that area. 1790 is major support, and the fact that we undercut it just briefly, put in that bullish divergence, and then have since recovered, and now we're kind of holding it. I think 1790 is likely going to prove to be support. On the weekly chart, 1790 comes all the way back to 2011. We had 3 reactions back here over a few years, a year and a half or so, that verified that as major resistance back then, and I'm starting to see signs that we're verifying that as major support now. So again, we're in the area of major support. We've undercut those lows, put in bullish divergence. It's a very bullish setup in the charts, and it's very constructive. So I think we're due to make another leg higher in gold. Quick look at the financials. I don't see anything bearish in the financials right now. Here's the daily chart. Just pointed straight up, and we bounced off support right here, and obviously that's holding. So here's your bull market in the financials going back to about 2011, and we had the undercut during COVID. They've so far, to me, this looks like they've been able to successfully recover that bull market. So I don't see anything bearish in these right now. On the daily, it's just not there. Now, if we break back down below this level of 29.50 or so, start to get back below here, that would be bearish. But as of right now, bullish. When I look at the hourly, You can see the momentum just making new highs in the hourly momentum. So in general, this is just bullish. But at the same time, what's bullish for the financials, which is rising interest rates, is bearish for the technology sector. And the technology sector has a higher weighting in the S&P 500. So that's something to take note of. That's why I don't think the SPY can really go up without tech. It might not go down as much if financials are strong, but it's going to have a hard time going up. Apple, you've got, I really have the support resistance line at this 125.40 area. And you can see we had some reactions back here. We're below it basically. And so this looks very much like tech. We're up, kind of bouncing into it, flagging out a little bit, but we're still below resistance and we're trending down. So still bearish on Apple. I believe Apple is headed lower. I've got some previous lines marked out in Apple. So, oh, look, it's funny. We hit that one right to the T the other day, yesterday. So that's interesting. Hit that major support. And that's where we bounced. Okay, that makes sense. You bounce there right up to resistance. But again, I think we're heading lower in Apple. I'll have to kind of tighten this up and look at this a little bit better. Microsoft. All right, so Microsoft's still holding above this line here. This is kind of the line I'm watching, 227.85. We break below that. That means all this price action up here was a false breakout. All right, and we're going to recapture back into this big trading range. That's going to be bearish if that happens. Until then, we're at, coming into support. If it holds and starts to bounce, that's bullish. So it could go either way. Q's probably isn't going to break down if Microsoft's, going to be bullish. So something to look at. Here's SQ, just an update because they're down about 5% in the today after some sort of news. I don't know. But the thing is, technically, I just don't see a trade here yet. It has negative divergence. All this action up here has been divergent highs, so I think a trend change is likely. But I got to see a break of this lower trend line right down here at 192. I'd be waiting for a break of that. Looks like the 200 is going to probably come right into that as well. So a break of that and probably the 200-day simple moving average would be the signal that this is now changing trend and downtrending. Until then, it's just in this upward price channel, kind of bouncing between both ranges. We're in the middle of the range, so I just don't see anything right now. Someone asked me about energy, like XLE, and ExxonMobil, CVX. Okay, so in general, I'm bullish the energy stocks. When did I get bullish? Well, I got bullish the energy stocks right down here. If you go back and look at the time frame, I put out a video that specifically was titled Oil Stocks, and I was talking about how I was bullish the oil stocks. I started to get long all the different oil stocks down here, and that played out for a big rip higher. So these things moved up 40% or so pretty quickly, and obviously they're still continuing higher. So in general, I'm bullish the oil stocks. I think they're probably due for a pullback. But, who knows? I mean, we don't have it yet. So longer term, bullish the oil stocks. It's kind of the same trade. For me, it's kind of the same trade as a gold trade. It's more of an anti-dollar trade than a economic strength trade. But, I think it's probably due for a pullback, but I just don't see anything that I want to short in this market. So I'm not shorting any of these oil stocks. I'm long a couple of them that are longer term holdings for me that I'm not really trading. I'm just investing in those. So I don't really point those out. BP, stuff like that. That's one of them. Royal Dutch Shell is another one. But in general, I think there's probably in the short term a pullback coming. Nothing I'd really want to short though, to be honest. All right, just trying to point out the things that are interesting. TAN, so we're getting a little bit of a bounce today. That's fine, but we broke trendline support, so that's the point. Now that we've broken trendline support, look for more downside. Even though you might bounce, you can continue to bounce. I think you're going to continue to, over the bigger picture in a trend, trend to the downside. So here's your upward trend in tan. We broke support here, nice impulsive sell down. We hit what looks to be, you know, the first level of support, which is about this 98 area. Let me go to the hourly. You know, it's about 98. This was the very first reaction that this thing had. So we ran down to that, undercut it a little bit, shot right back up. See the close? So see how we opened lower, but then they closed the hour right there at that support, and then every other hour held support. So again, you're getting the initial bounce off that tag of the first support. You know, we could run up and fill this gap up to 110.22 or so. But the point is that this is sell the rip now. So when you get the rip, maybe you fill the gap. That's the area you want to either add to shorts or get out of your longs if you're still caught long on this thing. Because I do expect this to trend to the downside now over time. So next level of support, 78.60. I think we do head down there. Maybe we bounce a little more, but ultimately I think we're heading down there. And so that's what I'm swing trading this. I'm just going to ride out the bounces and let this go. Now, I would get out of the trade if it's able to recover back into here and start to break out to the upside, you know, then sure, I would cover. But until then, you know, I'm looking to actually add to a short position as it bounces. Negative divergence right there. So this was all divergent high price action right up in here. Signaling a trend change was likely, and then you wait for the break of the trend line, which we did get. So in general, have everything we need for a swing short, and I do think we continue lower. Ultimately, I think this thing could easily get down to 57, about 58. All right, that's about as far as I'm willing to say that it goes for right now. But what I like to do is I just, I add to shorts as it rips higher, and then as it drops down to support, I take profit. It's kind of how I do it. Something about the VIX, you know, we're not getting any action in the VIX. So the sell-off in tech has not bled over to the SPY is basically what's going on. So the VIX is not rising. I think that's going to change. I think we're probably going to get a spike in the VIX when the sell-off in the tech sector bleeds over into the SPY, the S&P 500. But we just don't see it yet. So it's interesting. You know, keep an eye on that. You would expect a rise in the VIX. We're still at support. You know, if I roll out, this is kind of the level right around 22.20, $22 we'll call it. We were under that for many years, and recently when we spiked higher, we've been holding above that. So that's kind of the level of support, and we're just kind of hanging there. So again, looking for, we're at support in the VIX, looking for some sort of a spike. Just need to start to see signs of a sell-off in the SPY. All right, Walmart, this one, look at this. It continues to be weak. So again, I'm looking at this chart, and I think Walmart over the longer term, I think it's heading down to this 86.70 area. Why do I think that? Well, a couple things. One, we have a big bearish rising wedge pattern that goes back to 2015, or about 2015. A multi-year bearish rising wedge pattern broke to the upside. This is, usually this is the area that is the low probability area that you're going to get a sustained move higher. When we broke to the upside, we put in negative divergence. So you see the negative divergence here. Momentum has been fading, and now price is starting to fade back down to, this is the support area around 130, 131, depending on when we get there. We'll likely get a bounce there. But if we break that and start to impulsively break down, then I think it's very likely we're going to break all the way down through the bottom edge of this support and start to head down to 86. Doesn't have to play out. A lot of things have to happen for it to get down there, but that's the direction that it looks like it's heading right now. Okay, pins. I covered this short trade yesterday. What I did is when I saw that the pre-market yesterday, the market was going to gap down and looked weak, I set a order to cover right here at my first level of support, which was about 72. It was about 72.70, That's where I set my order to cover this short trade. Again, the reason why I covered this one is I've got a lot of short trades on right now. And so, I like to take some of these, I like to take some profit as we get these drops, reduce some risk, lock in profit. I think that's prudent. So I set the sell order, caught basically the low of the day yesterday in pins, and this thing just ripped higher from there. So I just let that one, it just continued to go higher. I was out of the trade, covered at the lows. I got into this thing, I think on this pop right here, that's where I shorted it, was right here. I don't know if I got it at the very high, but that was about a 15% gain in pins in a period of just a week and 2 weeks or so. So took that money off, and we'll just I've got a lot of other short trades to kind of manage, so I'll probably just let this thing do what it wants to do. Nike. All right, so uptrend line on the daily chart. This is going all the way back to the March 2020 lows. As we zoom in, bearish rising wedge right here. Broke to the upside, failed. Broke to the upside again, failed. Negative divergence across the board on the PPO and the RSI. And then we broke trendline support. So here's your break. Back test, fail. And now we're just, we were kind of, it was a kickback rally and fail back down to support. And you can see we came in, we're bouncing, but, we bounced off support, but we're now heading back down. So to me, this looks like it's going lower. I think the next area that will likely get a bounce is down here at 117.06. That's a gap that actually wasn't filled. You can see right here, they headed towards the gap to fill it, but they stepped in early and bought it up. So I think if we break this level here at 131, we're going to come down and fill that gap. All right, so that's that one. PayPal. All right, so PayPal has this lower trendline support coming off the March 2020 lows. I'd wait for a break of that trendline support. It's about 251 or so. I'd wait for an impulsive break and a daily close below that trend line. You could step in when it starts to break, but if it recovers, you'd want to get out of that. And so that daily close is important. I think we're going to get it because, we overshot this area right here, which was the resistance, and have now failed back down to it. But until we see it, I'm not interested. If it breaks, then, I think there's a good probability we're going to come all the way down to 129.75, which is a gap fill. It's going to take time, and we're going to, there will be bounces along the way. But I think if we start to break and start to trend down, that's going to be the ultimate destination. This one does not have negative divergence on the daily, on the RSI, or the PPO. So, that's one thing that gives me a little pause on this one. So just something to note. All right, Tesla. So Tesla yesterday fell to some support. So we're getting a bounce off of that support. Nothing's out of the ordinary on that. So you can see here, Tesla gap down, really fell down to all the way down to 623.34, which if I look at the hourly, that was kind of this zone right in here. So I had the top of the zone marked out and the bottom of the zone where I could mark out the most reactions. And we basically fell, as I zoom in, we fell right down to it, undershot it a little bit, but basically recovered back above that support right there at 656.80. And now we're bouncing. So where are we bouncing to? Well, probably going up to here, up to 780. Likely that's where this the rally that this is in right now is going to end. They could step in early, so keep a note of that. But I think up in this area is about as far as it's going to go, and then we're going to continue to trend to the downside. So I do see this breaking down, going lower, at least down to this area of about 5. Depends on when we get there, but it's potentially 550, somewhere around here. We got a trend line where we've had 1, 2, 3, 4 reactions along that trend line. And so I think we're going to head down and tag that trend line. And, if from the highs to the lows, if you look at it, it doesn't look like much because I use log scaling, but from the highs all the way to the trend line, that'd be a drop of about 40%. So that's a good sized drop in in a stock. 40%. I mean, that's full on bear market. That's where I think Tesla's heading. And again, we could go a lot lower. There's always the possibility. This thing has been, the valuation on this stock is out of control. So we could obviously go a lot lower. I think that's just kind of the short-term target right now is that area. So 540 or so, depending on when we get there, of course. Just a general look at some of these ag commodities and copper and stuff. In general, they all look strong still. Corn does have negative divergence, and we are putting in a bearish rising wedge. So I think we're going to get a breakdown in corn. And if we do, I'd be looking to buy corn back at this 1426. That would be a beautiful area to be able to get long corn for what looks to me like the start of a bull market in corn. If I go to the weekly, you can see big downtrend in corn over many years. And we broke out. So that's definitely a breakout. What I'd be looking for is a back test of this trend line in the area. It doesn't actually have to do the back test, but somewhere down in the area. I suspect that's where we're going to go in the short term, is do a back test. And that would be an area that I would definitely want to be long corn. If you can get it, you never know. When something's starting a bull market, it can just run. So if we going back to the daily, if we burn through this divergence and corn just explodes to the upside and we come in and make a new higher high in the RSI and the PPO, it just continues to signal that this is, starting a new bull market. And so all the ag commodities look strong in general. So just something to take a look at. And gold miners across the board still look constructive, look like we're basing out, kind of putting in a bottom and about to make a new leg higher. That's what I see in the gold miners. Until that changes and I start to see until I start to see technicals that tell me that we're not finished going down. To me, I see technicals that tell me that we're putting in a bottom. And I'm expecting higher prices in gold miners. That's all I got, guys. Let me know what else you guys want me to cover. Leave a comment below, and I'll do my best to try to cover those in future videos. And I'll catch you guys on the next one. Bye.